Hello traders, welcome to the channel again. André Cardoso here, thank you for being here as always. For today I want to cover a couple of charts that I shared before with you. Let's start with the DXY. I shared this bearish crab pattern. This is a lower time frame or a lower degree event. So this is a pattern completed at 104.62. I called your attention to this next pressure level above the daily fractal resistance. You can click this link to see my previous video, and I talk about that specific Fibonacci level, which may offer some pressure for the DXY. So that completes the bearish crab pattern, and I'm expecting to see the DXY trading back to the previous resistance, back to 103.86. This is the default target zone for that pattern. As I said yesterday, nothing assures me the price will find a top or will form a top at this Fibonacci level. Of course, if you want to trade to the downside with the DXY, taking advantage of this pattern, and if the price keeps trading even lower, even better. But I will not be surprised to see the DXY trying to search for a major retracement. As I said yesterday, 106.15. There's a 38% Fibonacci retracement from the previous monthly fractal to the daily fractal support printed below, and there's also a convergence between the alt-bat pattern completion point at 106.24 and that 38% Fibonacci retracement level. Of course, this is only a pattern projected above. This is what we call pure speculation. I want to be prepared for just in case the market forms that pattern, very similar as on these lower degree events. I projected that pattern in order to get ready for a potential pressure zone for the DXY at 104.62. We are seeing that pressure. We are not sure about the outcome of the pattern, but the pattern suggests the retracement. The same may happen later if the price approaches this major Fibonacci level, forming that bearish alt-bat pattern at the 113% Fibonacci level. We will expect a major retracement to the 38% Fibonacci level of this last move from the lows to the completion point of the pattern. So we will expect a deeper retracement after the formation of that pattern also for the DXY. For now, of course, pay attention to this lower degree bearish crab pattern completed at 104.62, because that pattern, as I said, suggests let's say a limited retracement, if you want to consider this a limited pullback to the previous highs or previous structure resistance. So pay attention to that on the DXY. Of course, if you want to check the cable, the Aussie, the Kiwi, I will talk about the Kiwi now because we have also the bullish shark pattern, the bullish crab pattern completed at the golden Fibonacci level. But if you want to see all the others, the measures, specifically the pound and the Aussie, check the previous video, click that link which is now showing in your screen, and check my previous, check that pattern, the patterns that I projected before. So the Kiwi, let's make a parenthesis here and talk about the Kiwi. As I said, I projected this pattern at 61.97, so this is the golden Fibonacci extension of the last swing high, the correction, the move after the impulsive swing to the downside. We entered in a sideways moving process, and that pullback extended to the golden Fibonacci points to 61.97. So that completes, or let's say that helps form the bullish crab pattern at this price zone. So what we have in convergence, we have the 127% Fibonacci extension of the first swing low, which also completes the what we usually call the ABCD pattern. So we are also facing the default configuration or default variables, which allows us to identify the bullish ABCD pattern. Let me try to see this one. It was pushed to the 127% Fibonacci extension, as you can see, and there's also an extension of BC, okay, an extension of B to C wave projected below, as you can see, 161.8% Fibonacci extension level. So don't get surprised to see finally the kiwi starting to pull back again or to bounce from this price zone after this move to the downside. Another pattern that we can identify on a lower degree, and I just saw that now, not well, it's here already for a couple of time already, but this is also a minor, probably a symmetrical pattern. I'm not even sure if this is a symmetrical move for the kiwi, but it's not a symmetrical move, but it is for sure a lower degree ABCD pattern also, if the market fills the default expectations, which is at the 127% Fibonacci. There we are. We have also a minor or a lower degree ABCD pattern completed for the cable, in this case at the 141% Fibonacci extension, and it's very interesting to see that we have perfect convergence between the 141, 161 and the 127% Fibonacci extension. That's amazing. The kiwi should trade higher, period. That's what I expect. The market needs to trade. The market needs to bounce. It will trade the previous structure support again. Pay attention to this move for the kiwi. Learn that process. I'm not here to provide you with a situation to trade or an opportunity to trade. If you want opportunities to trade, subscribe my Discord server, and from there I will share a couple of charts with you to trade, the charts that I trade in the positions that I push to myself and for other subscribers, and you get access from there. Dollar versus the yen should trade back to the 38% Fibonacci minimum. So this is a default target for the shark pattern completed at 134.50. I shared this pattern before with you actually yesterday. 50% Fibonacci retracement. It's a default target for the pattern. Of course, trade the Fibonacci levels. I admit this is a very nice swing to the downside towards the 38% Fibonacci. We don't need to target the 50%, I believe. I believe the 38% Fibonacci offers a nice run, 144 points for the Japanese yen. It's a good trade, 1% below your entry. So if you enter this setup, you should expect the retracement. Very similar with the euro versus the yen. I shared also this expanding triangle pattern yesterday. We have patterns projected above 143.96, which is still possible to see the pattern forming that sequence, but I'm now favoring situations or positions, not positions because I don't have an edge to trade at this point. I admit that the breakout of the support will trigger downside momentum, and eventually we'll be forced to readjust this expanding triangle that I deleted just now, because if the market breaks below this fractal support, that will confirm a false breakout above the resistance. And as I said multiple times, after identifying a false breakout, we should search for an extension to the golden Fibonacci level, and that points to the 38% Fibonacci. So we have kind of a convergence, actually not so, 38% Fibonacci retracement if the market forms the pattern above. If we adjust the retracement level, that will point to just a few points above the 38% Fib. So we have the golden Fibonacci extension level. And by the way, let's keep this expanding triangle right there. I will not be surprised to see the confirmation of a false breakout above. You have the previous structure resistance, and we have new higher highs. If the price breaks the support position at 142.85, that confirms the false breakout above, and we should see the market searching for the golden Fibonacci level. And that, of course, will complete also a minor shark pattern right there on a lower scale or a lower time frame chart. But that's a golden Fibonacci, a potential reversal Fibonacci extension level. So I will not be surprised to see a reaction from this price zone. I favor situations to the downside, but I don't have an edge to trade. I don't have a pattern which allows me to manage my risk, and I don't have a default target at this point. If the pattern completes above, that will offer me a probability, an edge. Okay, I have a probability for the market to trade, to print a retracement to the 38-50% Fibonacci level. Until there, if there is no pattern, there's nothing to rely on. Okay, there's no edge to trade. Even though I suggest all the yen pairs a small period of downside momentum from the current price zone. I shared yesterday one exception to the upside, which was the pound versus the Japanese yen with this bullish flag pattern. I'm seeing this as a potential bullish flag pattern, and eventually we are already threatening the resistance. I need to see a clear violation of the previous highs in order to confirm that. But even though I'm not interested to trade at these levels with the pound versus the Japanese yen, but I also shared with you that technical double bottom, which means we saw the formation of this bullish 2618 at the golden Fibonacci after trading above the next zone of the double bottom. We saw the price pulling back to the golden Fib. I shared this pattern before the completion of the pattern, so before the fall, before the retracement. I shared it and I said, if the price starts to find resistance and prints a retracement to the golden Fib, that will complete the bullish 2618. We should expect a move similar to the previous and first swing high projected from the golden Fib or the lows. So I will not be surprised to see the pound versus the Japanese yen trading just a couple of points above the recent highs. We have default targets for the technical double bottom at 165.29, but we saw some resilience to trade above, to break above the resistance. So we need to wait for that to happen. That may trigger a move, let's say similar to 300 points, 1.9% above the weekly fractal resistance positioned at 161.81. So there's a potential move to the upside for the pound versus the yen. Of course, if you trade if you trade those flag patterns or basic patterns formations, you should pay attention to the eventual breakout of this structure, even to the upside, or a breakout of the support, which should trigger also momentum to the downside. Aussie versus the yen, I call your attention to this potential head and shoulders pattern formation. I think we have already, actually this is one of the setups that I shared with my subscribers. The edge and shoulders pattern formation, we are now threatening the violation of the support. I admit there's room for downside momentum for also for the Aussie versus the yen. So we have a position to the downside after breaking this ascending structure support. So we're still trading below that trend line support, holding that neck zone. So we have the first lows, we have the reinforcement of the neck right there. So if you draw a line right there, you can see we are trading below that structure, but we're still trading above. Actually, the market is feeling some resilience to break the fractal support printed at 91.99. But that's what we have. We have an head and shoulders pattern. I have probably a bit aggressive short for this one, but I do expect moves to the downside. And basically, this was a trade. This is mixed between a technical trade and a symptom for all the Japanese yen pairs. So I truly believe they need to pull back, and I believe the one that may offer me a nice risk reward, it's Aussie versus the Japanese yen. So that being said, I'm paying attention to this move to the downside also for the Aussie. Euro versus the pound, I shared it this morning on Twitter. I posted this chart before also on my previous video, the eventual formation of this bearish shark pattern at the golden Fibonacci extension. There we are, 89.20, nice reaction to the downside. We expect the 50% Fibonacci retracement at 88.61 for the euro versus the pound. We already covered the Dixie. Let's cover and look at this nice reaction. Look at this nice reaction for the Dixie to the downside after the formation of that crab pattern. Now let's cover gold, silver, SPX 500, German DAX, bonds, bunds, and Bitcoin. Let's start with let's finish with those. Let's start with the gold. I posted these charts before. I'm not sure about the outcome. I'm never sure about the outcome of these patterns. We always expect a reaction after the formation of those patterns, but as I said multiple times, the only thing that we know is the risk of trading that pattern, because we understand the pattern can fail. We know where the pattern invalidates, which allows us to protect from major losses. So the main objective: keep your losses small and try to maximize your profits. Some of you are already familiar with these expressions. So I posted this pattern before for gold. In fact, let me pull back a little bit. In fact, I posted this shark pattern at the golden Fibonacci extension 1864. We saw a very nice reaction to the upside. Tricky to trade, very tricky to trade, very annoying in terms of structure. Not a direct move. We have swing high, swing low, swing high, swing low. Actually, we have almost a 6-wave structure to the upside, which is not usual. A very complex structure, but it ends up forming what we may call the bearish flag pattern. Some of you are also familiar with this shape printed recently for gold. I think we are now seeing an ending diagonal, which means we are in the last phase of the bearish correction. I need to see a breakout of this wedge, and if that happens, we may see gold trading much higher, specifically the 38% Fibonacci level, positioned and readjusted right now at 1872. I will not be surprised to see, in fact, we have a nice reaction on today's section for gold right there. That being said, gold, I assume, and after the formation of this shark pattern at 224, I will assume the market will print a bounce, or will bounce from this price zone. I'm not sure if it will be similar to this one. Eventually, the market will print something similar to this. Why the hell I'm not being capable to copy this? Okay. This is not a trend line. This is a regression trend. But I'm not sure if the market will print something similar to this process on gold printed before, or if it will print the expected reaction to the upside, aggressive move to the upside as expected after the formation of the shark pattern. But be careful, because the market may stay inside the recent range. So we have a new fractal support printed at the bottom. We need to adjust these fractals at some point in a couple of hours. That will turn our fractal support. So we are now threatening the recovery of the previous support level, but nothing assures me the price will trade at those levels. The pattern suggests that move the same way it was suggesting from the golden Fibonacci, and the price fails to achieve the 50% Fibonacci level. Once you saw the price starting to bounce, as you can see, the price fails to achieve not even the 50, not even the 38% Fibonacci level right there. So nothing assures me the price will print something similar 224, bullish shark pattern completed, and something similar to this previous swing right here. Nothing assures me another flag pattern for gold. Why not? Why not? If the DXY keeps trading higher, of course, we will expect we will expect the metals to trade lower. So it's a natural process. But as you can see, the price before did not achieve the default target, so nothing assures me the price will trade at those levels again. But this is the bullish shark pattern, and I always assume the pattern should target the default levels. So I never put in question, oh, probably this is not the pattern, probably this pattern will not work. I may not be interested to trade it, but I never think the pattern will not work. I always assume the risk of a trade because I understand the price can fail, but I never enter the trade assuming, oh, this one should fail. It makes no sense to push a trade if you have that symptom with you, connected with you. You know, if for some reason, as I said before, if for some reason you feel uncomfortable in your trade before pushing the trade or after pushing the trade, you should not push the trade, and if you push the trade, you should exit as soon as possible. As soon as you start to feel that pressure in your stomach, you know, there's something wrong with this chart, there's something wrong with this pattern, I think there's a trend line putting some pressure. As soon as you start to question wherever it may emerge in your charts or whatever pressure element may start to emerge, you should exit your trade immediately. Then don't think twice. As soon as you start to question the direction of your trade or if the trade will work for you or not, you should exit your trade. As I said before, I always assume the price, after completing the pattern, I always assume the price will react accordingly, but I always assume the risk because I understand the price can fail. Understanding that the pattern can fail is not the same as assuming the pattern will fail. It's a completely different mindset, okay? It's a completely different mindset. You don't enter the market assuming the market there's a big probability for the market to fail. If there's a big probability for the market to fail and you enter the trade, let me know because I want to reverse that trade. But let me know first because I want to anticipate your moves, and I want to take advantage of your failed pattern and trade it in the correct direction. You know, so if you have a strong conviction of the pattern will fail, first of all, don't trade it, and if you do it, just let me know because I want to fade you. So that being said, it makes no sense, of course, if you feel uncomfortable. Just to say, if you feel uncomfortable with your trades, you should exit immediately. So one of the things that may happen for gold, it's something similar to the previous bearish flag. I will not be surprised to see that happening on gold and also on silver, but silver is a bit different because silver did not complete the bullish shark pattern at 224. We have a new fractal support printed a few points above, but even though I will not be surprised to see, of course, if gold starts to rally, if the dollar, the DXY starts to fall, and silver will feel the same impact, and it may start to trade at higher prices from the current price zone. Attention with this new lower low, probably we have divergence between those lows. Exactly, we have nice signs of divergence not only between those lows but also all this structure since these lows showing divergence. So especially now between the recent lows we have a strong signal of bullish divergence. I admit RSI is about to break above the midpoint of 50 levels, so I admit the next move on RSI, the relative strength index, will be to overbought conditions. So I have my overbought levels at 80s and my oversolds at 20. So I admit to see silver or the RSI being pushed to overbought conditions. If that happens, of course, the price should follow, and we may see also silver breaking above this trend line resistance and eventually trading a couple of points higher. SPX 500, I posted this pattern before. As I said multiple times, and some of you will remember this. Not so recently, but I used it before, this expression, which is if the bat pattern or the Gartley pattern fails you, just grab it. You know, if the bat pattern fails you, which is this M-shape configuration that we are seeing now on SPX 500, if the pattern fails you, just grab it, because if the market breaks this support, there is a huge probability for a move to the downside for SPX 500, and I will pay attention to the potential reinforcement of this ascending channel support and the formation of that grab pattern at 39.73. Even though we are now threatening the support level, nothing assures me the price will trade at this level. This is the price where I want to see the SPX 500 in order to offer me the best risk-reward opportunity that I can have to try the long side position with it. But I will not be surprised to see the price rejecting to trade above this or below this fractal support and starting to bounce from these lows, especially now with the DXY starting to pull back, gold starting to react to the upside also. If that confirms, if we confirm that, of course SPX 500 should start to trade higher from these levels also. Let's wait and see. Of course, big moves expected above the weekly fractal, in particular, with particular attention to the weekly fractal. So if there's a breakout above the weekly fractal, there's a potential move, let's say surrounding 3.3% above the fractal, the resistance, so for SPX 500, and eventually more, because we have the 200% Fibonacci extension, which is a default target for the cup and handle pattern projected at 44.35, and that also points to the highs or the top of this ascending channel or parallel channel structure. So pay attention to this. SPX 500 also now threatening the daily support. The German DAX is a very specific one, because on a higher time frame, and let me go into a daily, we can project a symmetrical pattern at new higher highs. That pattern will also converge with a bearish shark pattern, which is now projected at the 224, 16, 669. So there's kind of a convergence between those patterns, between this symmetrical pattern projected just a few points below and the bearish shark pattern projected at the 224% Fibonacci extension. But be careful with this one, because we're still trading the shark pattern at the golden Fibonacci level, and that may offer the retracement for the DXY. So if you go into a lower time frame, if I go into a 2 hours time frame, I started to track the possible edge and shoulders pattern formation before these highs. So as soon as we saw, as soon as I saw this shape, at some point I started to consider this as a potential edge and shoulders pattern formation. Okay, the right shoulder, the recent fractal resistance printed at 15,528. We have the daily fractal support at the bottom. This is a next zone, so I was expecting this as a edge and shoulders pattern formation, and we saw then, of course, new higher highs. We have a new higher high, kind of a double top for the DXY right there, which makes this support the next zone again, but for the double top. Other patterns that may emerge, another edge and shoulders, of course. We are now reinforcing support, and the eventual formation of the right shoulder needs to start to emerge. It's a bit strange, because this is the head for the pattern, this is the left shoulder, probably the lows. Well, it's not so it's not so simple to track this pattern at this point. Even if the market starts to form that right shoulder, it's not so simple to identify the pattern. Which is simple to identify as a support level, and that's enough. So I admit that a violation of the fractal will trigger not only the double top, but also that potential or that event or remote, let's call it a remote heads and shoulders pattern formation, because I don't like this shape between the shoulders, but it may emerge like that. So we may face a potential heads and shoulders pattern. I suggest to track it as a double top. It's much more simple than trying to, hey, let's wait for the right shoulder, and at some point the market will become annoying to identify that right shoulder, and I'm not so sure if this is an head and shoulders pattern. And in fact, it may unfold into different patterns, and one of the things that may start to emerge here for the Dixie, it's kind of that diamond shape pattern. A breakout above the diamond shape pattern will not be surprised. So the diamond shape pattern is something like higher highs, lower lows, and at some point the price starts to print lower lows and higher lows. And inside this range, if the price was trading higher, we expect a violation higher. If the price was trading lower, you expect the price to break lower, that diamond shape. So this may be what we may call also that diamond shape configuration. So in that being said, I will not be surprised to see more upside momentum for the Dixie without breaking the support. Of course, that a violation of the support, as I said, that will trigger the technical or the double top. I'm not sure if it is a technical double top. Let me just confirm. Let me delete this stuff from here. We have a technical double top for the Dixie, for the German DAX actually. We have the first highs, first close, retested. This is the next zone. So pay attention to this eventual double top formation for the German DAX and eventual moves to the downside. One way to project the targets is to change to a line chart and project and search for the 200% Fibonacci extension between the highs and the lows of a line chart, which means we are tracking the close prices above and the close prices below of the pattern. That pattern will point to 14,889. That's the default target for the German DAX if there's a confirmation or if there's a violation of the support. Now let's cover the bonds, the 10-year and the Bund. Both of them I shared a couple of charts before, specifically the 10 years, which has completed the bullish alt-bat pattern at 113% Fibonacci extension. That pattern suggests a bounce towards the 38% Fibonacci level. 113.06, that's the expected reaction after the formation of the pattern for the 10-year. And the Euro Bund, very much the same or very similar with the bond, but this one was this is the bullish bat pattern, was projected at 133.63. As we can see, the price did not complete that pattern just by a couple of points. In fact, we can consider this as a completed shape or a completed sequence. And the next sequence expected is, of course, the bounce towards the 38% Fibonacci level, 136.34 for the Bund. As you can see, the reaction on the Euro Bund will also influence the Euro Forex pairs, the pound, the Aussie, actually the Aussie and the New Zealand a bit less, but specifically the pound and the euro pairs may suffer some influence or some impact from the Eurobond, of course. And as we can see, both the Kiwi, the Euro dollar trading in the same direction as expected. Today, finishing with Bitcoin, be careful with the eventual pullback. I know this may be very missing the expression. The market may call for longs after the recent price behavior for Bitcoin. Probably many people are now trying, no, I missed this move, I need to try to get the next one. But let me tell you that probably you'll know that there is no next move to the upside before a correction or before a pullback. So I'm not sure if that will happen or not, but I believe after a retest of this this weekly fractal resistance, or actually this not the weekly, actually this was the weekly fractal resistance before. After a retest of this previous structure and fractal resistance, I'm not so convinced of more upside momentum, not before the pullback. I need to see Bitcoin starting to pull back. Another pattern that may emerge, and that's one of the reasons why I don't suggest situations, or I don't suggest more upside positions for Bitcoin, at least for now. It's because if the price approaches this structure support again, and that will depend how fast it will approach that support and what will happen next, but this may also unfold into a reversal price behavior in a form of an head and shoulders pattern. One of the reasons why we see moves like this so aggressive is just to hunt those stops positioned above the previous high. So don't get surprised to see these or to interpret these in the next sessions. Let's see how the market will react. But eventually we will talk about the potential false breakout above, and this is only a hunting process. And of course, this may turn the head for the head and shoulders pattern formation, and above all that, be careful with that crab pattern. That crab pattern will suggest at least the 38% Fibonacci retracement, and for that reason I'm also starting to track the possibility to form the edge and shoulders pattern formation. And if that implies the gold to trade a bit lower and silver to trade a bit lower and the Dixie to trade a bit higher, so be it. Which means some of these patterns that I shared before for the Aussie, for the Kiwi, and other expected moves to the upside that I have for the dollar related pairs, probably they will fail if that happens. So if Bitcoin starts to trade lower, the Dixie probably will trade higher, gold will trade lower also, at the limit it will move sideways, and probably those reactions that I expect from this price zone to the upside for some of these pairs will not work at all. Of course, it's one step guides to another, so it's that's the correlation, the market's correlation, so that there's nothing to do about that. So that being said, I hope you enjoyed the video and the content that I shared. Just today I took a few more minutes to explain a couple of more charts. So, but I hope you take some useful information. Of course, if you need to clarify something that for some reason I was not capable to explain correctly, please send me an email or send me a message on Twitter. I will try my best to explain better what I meant to say. So that being said, I hope you enjoyed. Have a nice weekend, everyone, with your friends and with your families, and I hope to see you next Monday when the market opens. I will be here tracking some of these patterns and other patterns that may emerge for the next week. Stay well and see you there.